Hello again, everybody. This is Dr. Richard Smith back on Cycles TV. Good to be with you all again. Today is April 29th. Wow, April. Can't believe it. Almost in the books. And it's been a pretty wild ride and the fun continues. So, gonna cover short-term equities today. Wanted to follow up on Lars's excellent presentation yesterday on the daily cycles in equity. We'll look at that briefly and then look at some of the shorter term cycles, what to expect maybe over the next week or two. But before I get into it, I also just want to mention fantastic interview this weekend was released with Janne Miettinen. I'm sure I'm pronouncing his name wrong, but on biological cycles, and particularly a potential explanation or mechanism of how hormones could actually explain population cycles and even the fourth turning cycles in social populations. So really fascinating interview, and dates back, or harkens back, I should say, to some of the founding impulses of the foundation, including the MetaMac conference in Canada in 1931, held by Boston financier and investment banker Copley Amory, where he brought 25 world-class wildlife biologists together for a very interesting week and a historic week. And it was very interesting to see many of those same cycles, those same findings affirmed by Janne, and also having a possible causal mechanism in the hormone cycle. So it's just fascinating. Really encourage everybody to watch it. And also Janne is going to be joining us in New York City for FSC Live in 25, which just gets better every day. So can't wait for that and hope to see you there. In the meantime, thanks for joining me today, and let's get into the cycles. All right, so first, as usual, want to revisit the cycles that we looked at last week. And last week we looked at gold. And we're starting out here with the 2-hour cycles in gold. And this is where we were at the end of last week, or a week ago, I should say, on Tuesday last week at about 8 or 10 a.m. Eastern time. And the main cycle that we looked at was this 150 period cycle. We noted that the spectrum was a little muddy, not super crisp, but we did have kind of an extended move past the top of the cycle. And we also were very close, maybe even there, to getting a break down in the cyclic RSI. And indeed, that happened shortly thereafter, almost immediately or the next day. We got quite a sharp move down in gold, and that has just kind of been skimming along the bottom for the past week. So that was the 2-hour cycle. On the daily cycle, we also were showing how gold had really extended beyond the cycle top, and we had a 110 cycle, 112 cycle here. Again, the spectrum not as clean as we love to see, but still pretty interesting. And we had seen momentum. Actually, we were right at the top there. That was the 21st. So by the time 22nd closed, we had started to get a down move, and into the 23rd as well. We had those two big down days in gold. Pretty nice example of how the shorter term cycles can often be a trigger right? So if we look at the daily cycle here in gold, we certainly had the setup, but we hadn't had the trigger. And, we got a good trigger here on the shorter term data, the 2-hour data. And if we look at the weekly cycles, we're also very extended here in gold. Certainly been a down week. Momentum is still going up. But, we're definitely getting some indications from the lower time frames that gold may well be topping. And it's interesting how that cycle, very strong cycle in gold, 232 weeks. Okay, that's a long time. That's like almost 5 years, top to top, but 2.5, a little more than 2 years from top to bottom, all the way through 2026. So the cycles are certainly saying that gold is due for a breather at a minimum. And so that was a nice result from last week. Also, just in the precious metals complex, while I'm at it, I just wanted to highlight a couple of things. This is GDX, the Gold Miners Index. Couple of very good cycles here, 195 and 123. Let me actually get the Bartels on these. The AI rank, so this 192 and this 125. Mostly the 192, I would say, it's kind of the best cycle here. But the other cycles are also confirming that we are in the vicinity of a top on the daily data for the gold miners as well. And we've got momentum clearly turning down, although not quite entering the official trigger of moving down through its cyclic RSI. If I hover over the last data point here, though, we can see both the 125 and the 151. If you look on the table on the right, they're orange, meaning they're either topping or bottoming, and then they have a red dot at the top right indicating that they're topping. So if we go select both of those, the 1, 2, and 3 cycles, we actually do see a break below the cyclic RSI and the cycle definitely topping. And lastly, on silver, we saw a similar cycle on gold, 237. Here it is on silver. Is this the weekly cycle on gold? Was 232, right? So silver, the cycle is a little behind the gold cycle, but we're also on a weekly basis, very strong cycle, and clearly an indication of topping without the same, all-time highs and new highs in momentum that we saw in gold, right? So silver had a momentum high back here in August of 2020. So, and a further high way back here in 2011. So we've actually had lower declining momentum, even into these newer, more recent decade highs. So silver, along with gold and the miners, all getting an indication from the cycles that a pause, if not a correction, is to be expected. All right, moving on to equities. So yesterday, Lars, as he so wonderfully does, covered some cycles, and particularly the daily cycles in equities. This is our market pulse, where we can see what's going on in different assets in the futures markets on different time frames, and particularly focused on this little cluster of buy signals in equities on the daily data. 9 is about as high as you ever get on this dashboard. So a -8 is a strong buy signal on the daily data. In this case, the E-mini S&P and the NASDAQ had a -7, the Russell a -7, and the Dow -8. And Lars covered these in detail yesterday. And of course, we all know the weekly cycle has topped in equities, the 41-month, 180-week cycle. But Lars showed this yesterday. Beautiful bottoming indicator in the cycles, in the daily cycles, and strong move from momentum coming back up through the bottom of the cyclic RSI. So indeed, there's no doubt about it. There's a buy signal from the cycles on equities on a daily basis. And if you look again at the cycle spectrum, pretty much everything is green except for a couple of short-term cycles, the 22 and the 17. And we're going to be looking at the shorter term cycles now in equities anyways, but pretty compelling buy signal here from the daily data on equities. But before we get too excited, wanted to drill down and look at the shorter term cycles. Okay, so love that fractal scale free aspect of cycles. And so going back here, what I wanted to highlight was on the 2-hour data, we have a cluster of red indicators, 5, 6, and 7. So, you know, +8 is the mirror image of -8. So we don't have the as strong a sell signals from the 2-hour data as we do the buy signals on the daily data, but definitely the 2-hour and the 4-hour in particular, and even the 1-hour are saying, well, we may need a little breather before the daily cycles get some follow through to the upside, or can be fulfilled with some follow through to the upside. So let's take a look at some of these shorter term cycles on the E-mini on equities. So we'll focus on the 2-hour data here. And if I click on the, yep, here we go. Okay. All right, so this is the E-mini S&P, the 2-hour data. And there are 2 cycles that the AI is selected, the 286 and the 111. Let's see if we agree. So clearly the 286 would like to have a little sharper definition, but there's clearly something going on here. And then we see the 111 here as well. The 1, 2, and both of them are showing down with the 286 topping, right? If we look at it, it's topping. And meanwhile, the 111 has already topped. So on a short-term basis, if we combine those two, and we look at the RSI, which is skirting along the top here, but it really looks like, unless we get a surprise burst up today, we're likely to see this roll over and give a sell signal. So I wouldn't be surprised to see a little down movement, say, you know, over the first week of May. This is suggesting maybe even a little longer, but definitely some caution from the shorter term cycles. And while we're here, let's go look at the 1-hour cycle on the E-mini as well. That's showing a +6, which because we've got the multiple cycles here, the 47 and the 203. Okay, I'm not sure why the 47 was selected. I guess it's got some, let's see, where is it on the spectrum here? 39, 44, 47. That looks a little iffy to me, but this 203 on the 1 hour data certainly is very clear on the spectrum. So, when we go to the 2 hour data, that would be the 111. So that's half of the 203. And we see the 203 on the hourly data really jumping off the charts here. And the momentum on the hourly data also fading, even though price is actually not is divergent from momentum here on a short-term basis on the hourly data. So on the hourly data, we see negative momentum divergence in a topping cycle. On the 2 hour data, we see quite a clear topping cycle. And lastly, let's go look at the 4 hour data. We've got a +6 on the 4 hour data here. So what's happening here? We've got this 141, very clear on the spectrum, and a 61. Where is that? That's over here. So got some good definition on the edges. Bartels on the weak side. If we just stuck with the 141 here, we'd see that. I also think this 99 looks pretty interesting from my perspective. So on the 4 hour, also got some pretty compelling tops in the cycles with momentum not having quite broken down yet. So that's the 1 hour, 2 hour, and 4 hour data on the E-mini S&P. And I'd say giving a note of caution to what otherwise is, where's the daily data on the S&P that we looked at? Here it is, a very compelling signal on the daily data from the cycles. So I would not be surprised to see a pullback, maybe even a retest of the lows. I wouldn't, that would be a lot to ask for, but definitely some tempering of the enthusiasm from this very compelling signal on the daily chart. So that's it for the E-mini S&P. Let's take a look at the NASDAQ now. It's going to be similar to the E-mini. So on the 1 hour data here, we've got the 205, and I think this 44 is questionable. But again, breaking of the momentum, negative divergence, breaking through the cyclic RSI. I like a short on the NASDAQ and the S&P right here based on the 1 hour data. And we see kind of some confirmation of that from the 2 hour data coming into a top, although momentum not quite breaking down yet. And the 4 hour data on the NASDAQ also indicating a top, though again, not confirmed by momentum yet. So the NASDAQ and the E-mini S&P have been very, very correlated, sharing most of the same cycles, and all on the shorter term data showing some indications of short-term weakness. Let's also take a look at the Russell, because that's been the weaker of the indices from a relative strength perspective, and also seeing some compelling sell signals from the cycles on the Russell. Okay, so these are the automatically selected cycles. If we drill in a little bit and look at some of the specific cycles like the 111 here, which you've seen in some of the other ones, the 78. Okay, the ones that clearly stick out on the spectrum, have a good bar tells. And we've seen a break of the cyclic RSI and the cycles clearly topping. And again, not as much of a bounce in the Russell as we've seen in, say, the NASDAQ 2-hour data. Let's see here. Well, I'm not sure about that. So we've had similar bounces. The NASDAQ did break these highs after the pullback, after the 10%, Trump pausing tariffs rally on the Russell. We also got that huge rally, and we actually have made some new highs there. So I can't say in the short term that the Russell has been weaker than the NASDAQ, so I take that back. But we're definitely seeing the cycles in the short-term cycles in equities pausing. We can see the same thing in the Dow here, the 2-hour data, pretty clear, topping. We do see the Dow weaker price-wise, right? We have not exceeded these highs from the huge Truth Social take off the tariffs rally. So the Dow has been relatively weaker. Cycles topping, see the similar cycles, the 111 in particular here, standing out, and momentum starting to break down. All right. So I think that's really the main thing I wanted to highlight today. So let me hop back over here and see what's on your mind today. Hello, everybody. Thanks for letting me know where you're spending your day today. And Mark, by chance, will the Market Pulse ever offer the 120-minute column? I would have to ask Lars about that, Mark. I think that we've been, providing for the Analyst Pro members. Okay, that's our intraday level where you get access to the intraday data and some of these proprietary dashboards. Boy, what we've developed, I have to say, is a lot of fun. And we're going to be covering it at the conference here in June in more depth. So that'll be a lot of fun. So what I was just showing was the 2-hour data. The Market Pulse is different than the Nowcast Pulse. So, I think it's pretty, I like the Nowcast Pulse. It just gives me that clear dashboard view. I can see those clusters. I'm not sure what the benefit would be by adding it to the Market Pulse, but hopefully that is helpful to you. So overall, I don't think we have to spend a lot of time today. I really just wanted to alert you to what the shorter term cycles are saying about the near term risk for a pullback in equities, because that those signals on the daily cycles are very compelling, and I don't want anybody to get ahead of themselves. So that's what I wanted to share today. I think I'll leave it at that for today. We've been going in depth week after week here for a little while now. So thanks for tuning in today. I know we're all keeping an eye on the markets. I thought Lars did a great job yesterday highlighting the weekly cycle and the daily cycle, and the shorter term cycles on the 1 hour kind of leading, showing the turning, and affirmed by the 2 hour and the 4 hour. I thought was pretty interesting and something you want to know. So thanks for tuning in today. Don't forget to join us in New York for Live in 25. And if you know somebody who you think should be there, let me know. And thanks as always for tuning in. Have a great week and be careful out there.